What's going on, guys? Broke Investor back, making another video. Today's video is how I would invest $1,000, meaning in the stock market, meaning individual stocks. I noticed throughout, whether it be on my Instagram or my Facebook groups, a famous question that comes up is, how would you invest $1,000, or how would you invest $100 or $10,000? It doesn't really matter the amount, but I figured $1,000 is probably more the midpoint for beginning or average investors to start. So I basically, I chose 11 stocks within my portfolio that if I had $1,000 and I was starting over, these would be the 11 stocks that I choose. And when I say 11 stocks, I mean 11 stocks, one within each sector. So before we get started, I am not a financial advisor, obviously. I'm a broke-ass investor. I'm just sharing my journey throughout YouTube, YouTube, Instagram, Facebook, everywhere. From beginning to end. I'm sharing my journey for the average investor who does not have necessarily that much money to put in, or doesn't necessarily know the stock market in and out. So as I'm learning everything and investing, I'm teaching along the way. So hopefully you guys enjoy this video. Hopefully you can see the chalkboard. This was a lot more information that I had planned. It actually took me forever. But hopefully you can see it. If not, I'm going through the numbers anyway. So let's get started. And I'll just go through the headers real quick. So obviously number, ticker, I left blank, meaning you have to watch this entire video to see all the stocks. Although if you look at the sector and the cost, you may be able to figure it out yourself. As I said, sector, cost, how much in dividends they pay per year, the annual yield, the frequency of payout ratio, and market cap. And I'm not going to go crazy and get into each and every stock, but I'm going to do a briefing on each, and that's basically it. You guys can tell me what you think at the end. So we'll start with number one. So number one is in the basic materials sector. It's called RPM. The industry is specialty chemicals. And basically, a couple names that you may ring a bell to you are DAP and Rust-Oleum. Obviously, you could see more on their investor relation page, but RPM has been around for quite some time. Their cost is 60. Well, before I get into the cost, today, what the hell is today anyway? I don't even know. Today is August 7th, 2019. So before you question the cost of the stocks, this was as of today. So, all right, the cost for one share of RPM is $66.99. Annual dividend payout is $1.40. The yield is 2.09. It's okay. Frequency, they pay quarterly as most do. Payout ratio 45.2, pretty good, and market cap 8.6 billion. Actually, another thing I did not add on there is they have raised their dividend for 44 consecutive years. So again, I'm not going to go crazy, but that's the stock I would choose in the basic materials sector. Next sector, communication services, everyone's favorite. No. People either love this stock or they knock it. And that stock is T. T meaning AT&T, right? So the industry that they are in is telecom services. They own DirecTV. They just bought Time Warner. They have a lot of debt, yes, but they make a lot of money. AT&T, obviously you know them for their cell phone service and everything, but now they're all into the TV services, and they're doing pretty good. I use AT&T for my cell service, and I use AT&T for the streaming service, and I'm pretty happy with both. Anyway, cost 33.86, annual dividend 204, yield 6.02%, starting yield. I mean, you gotta love it. Quarterly, yeah, everyone's quarterly, as I said, mostly on this. Payout ratio 58%, not too bad, and the market cap, obviously, the AT&T is a lot bigger company than most, 248 billion. So yeah, communication services, as of I would choose AT&T. Another sector, consumer cyclical, and the stock. This one was tough. I wanted to choose Starbucks, but I couldn't, so I had to choose McDonald's. Obviously, the industry for McDonald's is restaurants, and I mean, what more do I have to say about McDonald's? They've been around forever. Everyone eats it. It's the best fast food. No, it's not healthy for you, although some things are decent on their menu, and they have to provide nutrition facts, but I mean, they're not going anywhere. And this portfolio, this video is basically how to invest $1,000 being a dividend investor. So, probably should have mentioned that in the beginning, but oh well. Anyway, McDonald's is $213.15 a share. Yes, very expensive. They have had a lot of growth recently. They pay $4.64 a year, 2.18% dividend yield. They pay quarterly. Payout ratio 60.7%, and their market cap is 163 billion. I mean, McDonald's, their main thing, people call them a REIT because they own so much real estate. So, if they sell their real estate alone, you're almost automatically safe with your dividends. So that's who I would choose for consumer cyclical. There's also now consumer defensive. Again, it was down to Coca-Cola or Procter & Gamble. Had to choose Procter & Gamble because, I feel honestly more safe with them. But yeah, their industry is household and personal products, and some of the products that they sell is like Pampers and Tide, etc., things like that. So the cost $114.31, annual dividends $298. The yield is 2.61%. They also pay quarterly. Payout ratio 67.5%, and their total market cap is 285 billion. Again, another big company, but most of these are big companies, and they actually raised their dividend 62 consecutive years, which is pretty damn impressive. But what if you may not trust that, but why the hell not? 62 years, they've been through it all. So that's who I would choose for a consumer defensive. Next is energy. There's not many, I feel like, in the energy sector, but Exxon is one that's been around and, been successful. So, as I said, Exxon, their industry is oil and gas, and their costs right now, today, $70.18. Their total dividends, the payout is $3.48. The yield is 4.96, starting yield today, 4.96. That's pretty damn good. They also pay quarterly. Payout ratio a little higher, and 75.7%. Market cap is 300 billion. Another huge company. So, and I mean, what more can you say about Exxon? Right? They deal with the upstream, downstream, and chemical segments. So, in case you're, most of us see them as a gas station, but they're diversified in other areas as well. But, they seem to be safe. How many years have they raised their dividend? 36. Pretty impressive. Again, I should have wrote that on here. I apologize, but I'll hopefully, I'll cover as many as I can remember. Financial services. This one, I mean, it was kind of a no-brainer, at least for my choices, for my portfolio. MAIN, Maine. And, I mean, they're in the financial services field. Their industry is asset management. What do? They basically provide customized debt and equity financing solutions to the lower market. So, they get, they help people out, the lower companies, the smaller companies. Cost $41.28. Annual dividends $2.46. This does not include their special dividends. This only includes their normal monthly dividend. Yield 5.96%. Awesome starting yield. As I said, they pay monthly. Everyone loves a monthly dividend payer, and you should love Maine. Payout ratio 97.2%, a little high, but as I said before, they help people pay off debt, so they probably take a lot of debt. Market cap $2.1 billion, a smaller company, but you can't have all huge ass companies. You got to have a couple small ones in there. The payout ratio is also higher because of the special dividend. So I mean, it'll go away eventually. They're weaning out their special dividend, but supposedly they're adding that special dividend into the monthly amount. So, which is good. You'll get a raise. They've raised their dividend 8 straight years, at least according to dividend.com. Did not double check that. Healthcare. Who do you like in healthcare? Everyone loves Johnson & Johnson, right? But this was a recent one that I just got into. AbbVie. ABBV. Ticker symbol ABBV. Company's called AbbVie, and they spell it ABBVIE. Close enough, right? So they're in the healthcare industry, drug manufacturers. Their main product that you'll know is Humira. They actually just bought Allergan, which is why they're so cheap today. Allergan owns, they don't own it, but they offer Botox. So, some of the bigger products that you'll know. Cost, as I said, they're very cheap right now, $64.29. They're very cheap because they just bought Allergan. So, annual dividends, $4.28. Starting yield 6.66%. Awesome for a company like this. They pay quarterly. Payout ratio 54.5%. Market cap is $95.7 billion, and they increased their dividend 46 straight years. I mean, what more can you say? This is a healthcare stock, pretty cheap right now, but and it's one that I plan on holding forever. So that's who I choose for healthcare. Industrials. This one was pretty easy as well, and it's another one that's actually on sale in my opinion. But this is 3M. Hence the ticker symbol MMM. And another huge company. What do they sell? Scotch tape. They're everywhere. I mean, my tint on my car says 3M all over it. So you'll see 3M all over, a lot of adhesives and things like that. They're obviously in the industrial sector. They're diversified throughout. That's the industry, diversified industrials. Cost today $159.20. Damn. I think when I first got in the stock, I was over $200. So, damn. Annual dividends $5.76 per year. Starting yield 3.62%, which is, again, that's good starting yield for a company this big. They pay quarterly. Payout ratio 56.1%. Market cap $94.1 billion. How many years have they raised their dividend? Anyone know? 60. 60 years. They, just hit 60. So that's a lot. That's a lot. Real estate. Time to get into real estate. A lot of people love real estate stocks, and I don't blame you. They always pay the highest yield, and they have a lot of monthly payers. One of which is Apple. No, not Apple. Apple. Ticker symbol APLE. Apple Hospitality. Again, it's a REIT, and the industry is hotel and motel. They own hotels like the Hiltons and the Marriotts, all basically high-end motels, and they make money off of them. They buy them across the country, across the U.S. So it's actually my largest holding, and it's been my favorite. No capital gains in my experience, and no dividend increases, but you'll see why that doesn't matter. Cost per share $15.13. Annual dividend yield 120. Yield $7.93%, almost 8% starting yield. And where are you gonna find that in a safer company? Typically they're more high risk. I don't consider this one high risk. They pay monthly. Everyone loves monthly. I do. So there's only 2 monthly in here. That's the second one. Payout ratio 69.4%. Market cap $3.4 billion. Smaller company. They don't raise their dividends, so there's 0 raisers. There's no streak for them. They just pay. They just keep paying 7 to 8%. Boom, boom, boom. Maybe one day they'll increase their dividend. Until then, I'm happy. Most of these quarterlies, they increase their dividend every single year. But the REITs, if your starting yield is 8%, you're not going to get an increase every year. If they can stick with paying 8% throughout our lifetime, that's pretty good return. So that's what I choose for real estate. Everyone's favorite is O. I like O. I own O, but this is my favorite stock. Let alone REIT. Utilities. This one, I don't own many utilities. And this was one of the first utility stocks that I did buy. Ticker symbol SO, Southern Company. They're involved with electricity and gas. Enough said. Utility is boring, as people say. It's lame, right? Who cares? As long as they pay us dividends, that's all that matters. Cost $57.09. Annual dividend $2.48. Starting yield 4.34%. Awesome. They pay quarterly. Payout ratio 83.2%. A little high. It's a utility though. Market cap $59.5 billion. How many years have they increased it? 17. Impressive for a utility. So yeah, that's Southern Company. That's who I'd pick. Tech. I don't think I even need to write it in, but I will. I have, it's another Apple, the famous Apple. AAPL. As I said, technology. I don't really need to talk about them a lot, but everyone knows Apple. $195.50 today per share. They pay $3.08 in dividends per year. That's a 1.58% starting yield. Yeah, that's not good, but don't worry, it'll go up. Quarterly, they pay quarterly, yes. Look at that payout ratio, 26.2%. Their market cap is $890 billion. They were over, they were $1 trillion, but that market's been going down lately. They've been increasing their dividend 6 straight years. They actually just started really paying the dividend and increasing it. So judging on the company and how big it is and how low their payout ratio is and their consecutive streak, I'm guessing they're going to capitalize on that and continue to increase it. Some years will be larger than others, but eventually this yield will go up. So I wouldn't be too worried about such a low yield. So that is the 11 stocks I would choose if I had $1,000. And if you did the math, I apologize. The total is $1,030. So if you only have $1,000, you're gonna have to borrow $30 from someone. All right. So I apologize. I'm not exact on the number, but I choose one from each sector because you want to be diversified. And why not? Why not be diversified right up front, right? Play it safe, When you have a bit, most markets, they go down as a sector. So, you know, if one goes down, if healthcare is down today, your techs will pick it up. So that, you know, it's better to be safe than sorry. So, you know, again, I chose these blindly right off the bat. I didn't even look at the totals, and when I added them up at the end, it just happened to be 1,030. That's why I didn't mess with it again. I didn't try to get to be exactly 1,000, but I'm close enough, I think, for the topic at hand. And again, this is how I would invest 1,000 as a dividend investor. Some people are, you know, they more so. They also, you know, they invest for the long term, more so for growth, for, you know, short term trading, things like that. Although some of these are growth stocks, like McDonald's has been blowing up lately. Apple is always up and down. You know, and a couple, actually Procter and Gamble too, believe it or not. But my strategy is to buy and hold forever. So what I care about is this right here, these dividends. And I'm taking these dividends and I'm buying more stocks. And I'm taking those dividends and I'm buying more stocks, and so on and so forth and so forth. So when I say I'm investing $1,000, it's staying there. The $1,000 is staying in these stocks and it's never leaving. Unless something crazy happens to one of these companies. But the idea is I'm picking companies that will last throughout my lifetime. After that, my children can figure it out from there, whether they want to sell it or not. But I need them to last through my lifetime and pay dividends through my lifetime so I can live off of those dividends. Couple other things here, in case you're wondering. As I said, 2 of them are monthly. One pays, and when I say these numbers, you know, 14710. That's the number of month. Only one pays on, you know, 14710 months. 4 pay on the 25811 months, and 4 pay on the 369 12 months, the quarter end months. So it's still, you know, you're gonna get paid every month when you look at this. They're mostly mid to mega cap stocks. I showed you the market cap. There's nothing under mid range, which typically people don't want to mess with anyway, because that, you know, that involves a little more risk. The smaller the company, the higher the risk. And as I said before, I think I went through most of the years of consecutive raises. All of these have consecutive raises except APLE. That was 0. But again, that yield is so high that it's good. I think I missed McDonald's earlier too. McDonald's has raised their dividend 42 years. I think I missed AT&T. AT&T was 34 years. So the average yearly the average years of increases throughout all these is 32. The average yield, you know, the dividend yield is 4.36%. So again, that's pretty damn good as a starting yield. So, I mean, that's it. That's how I'd invest $1,000 if I had it today. And if that's all I had, I'd put it in these stocks and I'd leave it forever and ever. And I'd take the dividends, I'd reinvest them, and so on and so forth. So I hope you like this video, and if you can, click like, share the video, comment if you like these stocks, comment if you hate these stocks, comment if you're bored, or whatever, you know. Again, I'm the broke investor. I'm a new YouTuber. I don't post as many videos because I don't have the damn time. I work. I have a kid, a family. You know how it is. There's no time, and this crap takes forever. But that being said, again, I hope you enjoyed the video, and I'll see you next time. Later.